Chapter 4. Deposits, Loans and Other Operations. Article I. Operations of Universal Banks. Section 23. Powers of a universal bank. A universal bank shall have the authority to exercise, in addition to the powers authorized for a commercial bank in Section 29, the powers of an investment house, as provided in existing laws, and the power to invest in non-allied enterprises, as provided in this Act. 21b. Section 24. Equity investments of a universal bank. A universal bank may, subject to the conditions stated in the succeeding paragraph, invest in the equities of allied and non-allied enterprises as may be determined by the Monetary Board. Allied enterprises may either be financial or non-financial, except as the Monetary Board may otherwise prescribe. 24.1. The total investment in equities of allied and non-allied enterprises shall not exceed 50% of the net worth of the bank. And 24.2. The equity investment in any one enterprise, whether allied or non-allied, shall not exceed 25% of the net worth of the bank. As used in this Act, net worth shall mean the total of the unimpaired paid-in capital, including paid-in surplus, retained earnings and undivided profit, net evaluation reserves, and other adjustments as may be required by the Banco Central. The acquisition of such equity or equities is subject to the prior approval of the Monetary Board, which shall promulgate appropriate guidelines to govern such investments. 21b. Section 25. Equity investments of a universal bank in financial allied enterprises. A universal bank can own up to 100% of the equity in a thrift bank, a rural bank, or financial allied enterprise. A publicly listed universal or commercial bank may own up to 100% of the voting stock of only one other universal or commercial bank. 21b. 21cat. Section 26. Equity investments of a universal bank in non-financial allied enterprises. A universal bank may own up to 100% of the equity in a non-financial allied enterprise. 21b. Section 27. Equity investments of a universal bank in non-allied enterprises. The equity investment of a universal bank, or of its wholly or majority-owned subsidiaries, in a single non-allied enterprise shall not exceed 35% of the total equity in that enterprise, nor shall it exceed 35% of the voting stock in that enterprise. 21b. Section 28. Equity investments in quasi-banks. To promote competitive conditions in financial markets, the Monetary Board may further limit to 40% equity investments of universal banks in quasi-banks. This rule shall also apply in the case of commercial banks. 12e. Article II. Operations of commercial banks. Section 29. Powers of a commercial bank. A commercial bank shall have, in addition to the general powers incident to corporations, all such powers as may be necessary to carry on the business of commercial banking, such as accepting drafts and issuing letters of credit, discounting and negotiating promissory notes, drafts, bills of exchange, and other evidences of debt, accepting or creating demand deposits, receiving other types of deposits and deposit substitutes, buying and selling foreign exchange in gold or silver bullion, acquiring marketable bonds and other debt securities, and extending credit, subject to such rules as the Monetary Board may promulgate. These rules may include the determination of bonds and other debt securities eligible for investment, the maturities and aggregate amount of such investment. Section 30. Equity investments of a commercial bank. A commercial bank may, subject to the conditions stated in the succeeding paragraphs, invest only in the equities of allied enterprises as may be determined by the Monetary Board. Allied enterprises may either be financial or non-financial, except as the Monetary Board may otherwise prescribe. 30.1. The total investment in equities of allied enterprises shall not exceed 35% of the net worth of the BARC. And 30.2. The equity investment in any one enterprise shall not exceed 25% of total net worth of the bank. The acquisition of such equity or equities is subject to the prior approval of the Monetary Board, which shall promulgate appropriate guidelines to govern such investment. 21 Cat. Section 31. Equity investments of a commercial bank and financial allied enterprises. A commercial bank may own up to 100% of the equity of a thrift bank or a rural bank. Where the equity investment of a commercial bank is in other financial allied enterprises, including another commercial bank, such investment shall remain a minority holding in that enterprise. 21AA. 21 Cat. Section 32. Equity investments of a commercial bank and non-financial allied enterprises. A commercial bank may own up to 100% of the equity in a non-financial allied enterprise. 21A, Article II. Provisions applicable to all banks, quasi-banks, and trust entities. Section 33. Acceptance of demand deposits. A bank other than a universal or commercial bank cannot accept or create demand deposits, except upon prior approval of, and subject to such conditions and rules as may be prescribed by the Monetary Board. 72AA. Section 34. Risk-based capital. The Monetary Board shall prescribe the minimum ratio which the net worth of a bank must bear to its total risk assets, which may include contingent accounts. For purposes of this section, the Monetary Board may require such ratio be determined on the basis of the net worth and risk assets of a bank and its subsidiaries, financial or otherwise, as well as prescribe the composition and the manner of determining the net worth and total risk assets of banks and their subsidiaries. Provided that in the exercise of this authority, the Monetary Board shall, to the extent feasible, conform to internationally accepted standards, including those of the Bank for International Settlements, BIS, relating to risk-based capital requirements. Provided further that it may alter or suspend compliance with such ratio whenever necessary for a maximum period of 1 year. Provided, finally, that such ratio shall be applied uniformly to banks of the same category. In case a bank does not comply with the prescribed minimum ratio, the Monetary Board may limit or prohibit the distribution of net profits by such bank, and may require that part or all of the net profits be used to increase the capital accounts of the bank. Until the minimum requirement has been met, the Monetary Board may, furthermore, restrict or prohibit the acquisition of major assets and the making of new investments by the bank. With the exception of purchases of readily marketable evidences of indebtedness of the Republic of the Philippines, and of the Bangko Sentral, and any other evidences of indebtedness or obligations the servicing and repayment of which are fully guaranteed by the Republic of the Philippines, until the minimum required capital ratio has been restored. In case of a bank merger or consolidation, or when a bank is under rehabilitation under a program approved by the Bangko Sentral, Monetary Board may temporarily relieve the surviving bank, consolidated bank, or constituent bank or corporations under rehabilitation from full compliance with the required capital ratio under such conditions as it may prescribe. Before the effectivity of rules which the Monetary Board is authorized to prescribe under this provision, Section 22 of the General Banking Act, as amended, Section 9 of the Thrift Banks Act, and all pertinent rules issued pursuant thereto, shall continue to be in force. 22A. Section 35. Limit on loans, credit accommodations and guarantees. 35.1. Except as the Monetary Board may otherwise prescribe for reasons of national interest, the total amount of loans, credit accommodations and guarantees as may be defined by the Monetary Board, that may be extended by bank to any person, partnership, association, corporation or other entity shall at no time exceed 20% of the net worth of such bank. The basis for determining compliance with single borrower limit is the total credit commitment of the bank to the borrower. 35.2. Unless the Monetary Board prescribes otherwise, the total amount of loans, credit accommodations and guarantees prescribed in the preceding paragraph may be increased by an additional 10% of the net worth of such bank, provided the additional liabilities of any borrower are adequately secured by trust receipts, shipping documents, warehouse receipts or other similar documents. Transferring or securing title covering readily marketable, non-perishable goods which must be fully covered by insurance. 35.3 The above prescribed ceiling shall include the direct liability of the maker or acceptor of paper discounted with or sold to such bank, and the liability of a general endorser, drawer, or guarantor who obtains a loan or other credit accommodation from or discounts paper with or sells papers to such bank. B. In the case of an individual who owns or controls a majority interest in a corporation, partnership, association, or any other entity, the liabilities of said entities to such bank. C. In the case of a corporation, all liabilities to such bank of all subsidiaries in which such corporation owns or controls a majority interest. And D. In the case of a partnership, association, or other entity, the liabilities of the members thereof to such bank. 35.4. Even if a parent corporation, partnership, association, entity, or an individual who owns or controls a majority interest in such entities has no liability to the bank, the Monetary Board may prescribe the combination of the liabilities of subsidiary corporations or members of the partnership, association, entity, or such individual under certain circumstances, including but not limited to any of the following situations. The parent corporation, partnership, association, entity, or individual guarantees the repayment of the liabilities. B. The liabilities were incurred for the accommodation of the parent corporation or another subsidiary, or of the partnership or association or entity or such individual. Or C. The subsidiaries, those separate entities, operate merely as departments or divisions of a single entity. 35.5. For purposes of this section, loans, other credit accommodations, and guarantees shall exclude loans and other credit accommodations secured by obligations of the Bangko Sentral or of the Philippine government. B. Loans and other credit accommodations fully guaranteed by the government as to the payment of principal and interest. C. Loans and other credit accommodations covered by assignment of deposits maintained in the lending bank and held in the Philippines. D. Loans, credit accommodations, and acceptances under letters of credit to the extent covered by margin deposits. And E. Other loans or credit accommodations which the Monetary Board may from time to time specify as non-risk items. 35.6. Loans and other credit accommodations, deposits maintained with, and usual guarantees by a bank to any other bank or non-bank entity, whether locally or abroad, shall be subject to the limits as herein prescribed. 35.7. Certain types of contingent accounts of borrowers may be included among those subject to these prescribed limits as may be determined by the Monetary Board. 23A. Section 36. Restriction on bank exposure to directors, officers, stockholders, and their related interests. No director or officer of any bank shall, directly or indirectly, for himself or as the representative or agent of others, borrow from such bank, nor shall he become a guarantor, endorser, or surety for loans from such bank to others, or in any manner be an obligor, or incur any contractual liability to the bank, except with the written approval of the majority of all the directors of the bank, excluding the director concerned, provided that such written approval shall not be required for loans, other credit accommodations, and advances granted to officers under a fringe benefit plan approved by the Bangko Sentral. The required approval shall be entered upon the records of the bank, and a copy of such entry shall be transmitted forthwith to the appropriate supervising and examining department of the Bangko Sentral. Dealings of a bank with any of its directors, officers, or stockholders and their related interests shall be upon terms not less favorable to the bank than those offered to others. After due notice to the Board of Directors of the bank, the office of any bank director or officer who violates the provisions of this section may be declared vacant, and the director or officer shall be subject to the penal provisions of the new Central Bank Act. The Monetary Board may regulate the amount of loans, credit accommodations, and guarantees that may be extended, directly or indirectly, by a bank to its directors, officers, stockholders, and their related interests, as well as investments of such bank in enterprises owned or controlled by said directors, officers, stockholders, and their related interests. However, the outstanding loans, credit accommodations, and guarantees which a bank may extend to each of its stockholders, directors, or officers and their related interests, shall be limited to an amount equivalent to their respective unencumbered deposits and book value of their paid-in capital contribution in the bank, provided However, that loans, credit accommodations and guarantees secured by assets considered as non-risk by the Monetary Board shall be excluded from such limit, provided, further, that loans, credit accommodations and advances to officers in the form of fringe benefits granted in accordance with rules as may be prescribed by the Monetary Board shall not be subject to the individual limit. The Monetary Board shall define the term related interests. The limit on loans, credit accommodations and guarantees prescribed herein shall not apply to loans, credit accommodations and guarantees extended by a cooperative bank to its cooperative shareholders. 83A, Section 37. Loans and other credit accommodations against real estate. Except as the Monetary Board may otherwise prescribe, loans and other credit accommodations against real estate shall not exceed 75% of the appraised value of the respective real estate security, plus 60% of the appraised value of the insured improvements. And such loans may be made to the owner of the real estate, or to his assignees. 78A. Section 38. Loans and other credit accommodations on security of chattels and intangible properties. Except as the Monetary Board may otherwise prescribe, loans and other credit accommodations on security of chattels and intangible properties such as, but not limited to, patents, trademarks, trade names, and copyrights shall not exceed 75% of the appraised value of the security, and such loans and other credit accommodation may be made to the title holder of the chattels and intangible properties or his assignees. 78A. Section 39. Grant in purpose of loans and other credit accommodations. A bank shall grant loans and other credit accommodations only in amounts, and for the periods of time essential for the effective completion of the operations to be financed. Such grant of loans and other credit accommodations shall be consistent with safe and sound banking practices. 75A. The purpose of all loans and other credit accommodations shall be stated in the application and in the contract between the bank and the borrower. If the bank finds that the proceeds of the loan or other credit accommodation have been employed without its approval for purposes other than those agreed upon with the bank, it shall have the right to terminate the loan or other credit accommodation and demand immediate repayment of the obligation. 77. Section 40. Requirement for grant of loans or other credit accommodations. Before granting a loan or other credit accommodation, a bank must ascertain that the debtor is capable of fulfilling his commitments to the bank. Toward this end, a bank may demand from its credit applicants a statement of their assets and liabilities, and of their income and expenditures and such information as may be prescribed by law or by rules and regulations of the Monetary Board, to enable the bank to properly evaluate the credit application, which includes the corresponding financial statements submitted for taxation purposes to the Bureau of Internal Revenue. Should such statements prove to be false or incorrect in any material detail, the bank may terminate any loan or other credit accommodation granted on the basis of said statements, and shall have the right to demand immediate repayment or liquidation of the obligation. In formulating rules and regulations under this section, the Monetary Board shall recognize the peculiar characteristics of microfinancing, such as cash flow-based lending to the basic sectors that are not covered by traditional collateral. 76A. Section 41. Unsecured loans or other credit accommodations. The Monetary Board is hereby authorized to issue such regulations as it may deem necessary with respect to unsecured loans or other credit accommodations that may be granted by banks. N. Section 42. Other security requirements for bank credits. The Monetary Board may, by regulation, prescribe further security requirements to which the various types of bank credits shall be subject, and, in accordance with the authority granted to it in Section 106 of the new Central Bank Act, the Board may by regulation reduce the maximum ratios established in Sections 36 and 37 of this Act. Or, in special cases, increase the maximum ratios established therein. 78. Section 43. Authority to prescribe terms and conditions of loans and other credit accommodations. The Monetary Board may, similarly in accordance with the authority granted to it in Section 106 of the new Central Bank Act, and taking into account the requirements of the economy for the effective utilization of long-term funds, prescribe the maturities, as well as related terms and conditions for various types of bank loans and other credit accommodations. Any change by the board in the maximum maturities, as well as related terms and conditions for various types of bank loans and other credit accommodations. Any change by the board in the maximum maturities shall apply only to loans and other credit accommodations made after the date of such action. The Monetary Board shall regulate the interest imposed on microfinance borrowers by lending investors and similar lenders such as, but not limited to, the unconscionable rates of interest collected on salary loans and similar credit accommodations. 78A. Section 44. Amortization on loans and other credit accommodations. The amortization schedule of bank loans and other credit accommodations shall be adapted to the nature of the operations to be financed. In case of loans and other credit accommodations with maturities of more than 5 years, provisions must be made for periodic amortization payments, but such payments must be made at least annually, provided, however, that when the borrowed funds are to be used for purposes which do not initially produce revenues adequate for regular amortization payments therefrom, the bank may permit the initial amortization payment to be deferred until such time as said revenues are sufficient for such purpose, but in no case shall the initial amortization date be later than 5 years from the date on which the loan or other credit accommodation is granted. 79A. In case of loans and other credit accommodations to microfinance sectors, the schedule of loan amortization shall take into consideration the projected cash flow of the borrower, and adopt this into the terms and conditions formulated by banks. N. Section 45. Prepayment of loans and other credit accommodations. A borrower may at any time prior to the agreed maturity date prepay, in whole or in part, the unpaid balance of any bank loan and other credit accommodation, subject to such reasonable terms and conditions as may be agreed upon between the bank and its borrower. 80A. Section 46. Development Assistance Incentives. The Banco Central shall provide incentives to banks which, without government guarantee, extend loans to finance educational institutions, cooperatives, hospitals and other medical services, socialized or low-cost housing, local government units and other activities with social content. N. Section 47. Foreclosure of real estate mortgage. In the event of foreclosure, whether judicially or extrajudicially, of any mortgage on real estate which is security for any loan or other credit accommodation granted, the mortgagor or debtor whose real property has been sold for the full or partial payment of his obligation shall have the right within 1 year after the sale of the real estate to redeem the property by paying the amount due under the mortgage deed, with interest thereon at rate specified in the mortgage, and all the costs and expenses incurred by the bank or institution from the sale and custody of said property less the income derived therefrom. However, the purchaser at the auction sale concerned, whether in a judicial or extrajudicial foreclosure, shall have the right to enter upon and take possession of such property immediately after the date of the confirmation of the auction sale and administer the same in accordance with law. Any petition in court to enjoin or restrain the conduct of foreclosure proceedings instituted pursuant to this provision shall be given due course only upon the filing by the petitioner of a bond in an amount fixed by the court, conditioned that he will pay all the damages which the bank may suffer by the enjoining or the restraint of the foreclosure proceeding. Notwithstanding Act 3135, juridical persons whose property is being sold pursuant to an extrajudicial foreclosure shall have the right to redeem the property in accordance with this provision until, but not after, the registration of the certificate of foreclosure sale with the applicable register of deeds, which in no case shall be more than 3 months after foreclosure, whichever is earlier. Owners of property that has been sold in a foreclosure sale prior to the effectivity of this act shall retain their redemption rights until their expiration. 78A. Section 48. Renewal or extension of loans and other credit accommodations. The Monetary Board may, by regulation, prescribe the conditions and limitations under which a bank may grant extensions or renewals of its loans and other credit accommodations. 81. Section 49. Provisions for losses and write-offs. All debts due to any bank on which interest is past due and unpaid for such period as may be determined by the Monetary Board, unless the same are well secured, and in the process of collection shall be considered bad debts within the meaning of this section. The Monetary Board may fix, by regulation or by order in a specific case, the amount of reserves for bad debts or doubtful accounts or other contingencies. Writing off of loans, other credit accommodations, advances and other assets shall be subject to regulations issued by the Monetary Board. 84A. Section 50. Major investments. For the purpose or enhancing bank supervision, the Monetary Board shall establish criteria for reviewing major acquisitions of investments by a bank, including corporate affiliations or structures that may expose the bank to undue risks or in any way hinder effective supervision. Section 51. Sealing on investments in certain assets. Any bank may acquire real estate as shall be necessary for its own use in the conduct of its business, provided, however, that the total investment in such real estate and improvements thereof, including bank equipment, shall not exceed 50% of combined capital accounts, provided, further, that the equity investment of a bank in another corporation engaged primarily in real estate shall be considered as part of the bank's total investment in real estate, unless otherwise provided by the Monetary Board. 25A. Section 52. Acquisition of real estate by way of satisfaction of claims. Notwithstanding the limitations of the preceding section, a bank may acquire, hold or convey real property under the following circumstances. 52.1. Such as shall be mortgaged to it in good faith by way of security for debts. 52.2. Such as shall be conveyed to it in satisfaction of debts previously contracted in the course of its dealings, or 52.3. Such as it shall purchase at sales under judgments, decrees, mortgages, or trust deeds held by it, and such as it shall purchase to secure debts due it. Any real property acquired or held under the circumstances enumerated in the above paragraph shall be disposed of by the bank within a period of 5 years or as may be prescribed by the Monetary Board, provided, however, that the bank may, after said period, continue to hold the property for its own use, subject to the limitations of the preceding section. 25A. Section 53. Other banking services. In addition to the operations specifically authorized in this Act, a bank may perform the following services. 53.1. Receive and custody funds, documents and valuable objects. 53.2. Act as financial agent, and buy and sell, by order of, and for the account of their customers, shares, evidences of indebtedness and all types of securities. 53.3. Make collections and payments for the account of others, and perform such other services for their customers as are not incompatible with banking business. 53.4. Upon prior approval of the Monetary Board, act as managing agent, advisor, consultant, or administrator of investment management/advisory/consultancy accounts. In 53.5. Rent out safety deposit boxes. The bank shall perform the services permitted under subsections 53.1, 53.2, 53.3, and 53.4 as depositary or as an agent. Accordingly, it shall keep the funds, securities, and other effects which it receives duly separate from the bank's own assets and liabilities. The Monetary Board may regulate the operations authorized by this section, in order to ensure that such operations do not endanger the interests of the depositors and other creditors of the bank. In case a bank or quasi-bank notifies the Banco Central, or publicly announces a bank holiday, or in any manner, suspends the payment of its deposit liabilities continuously for more than 30 days, the Monetary Board may summarily, and without need for prior hearing, close such banking institution and place it under a receivership of the Philippine Deposit Insurance Corporation. 72A. Section 54. Prohibition to act as insurer. A bank shall not directly engage in insurance business as the insurer. 73. Section 55. Prohibited transactions. 55.1. No director, officer, employee, or agent of any bank shall make false entries in any bank report or statement, or participate in any fraudulent transaction, thereby affecting the financial interest of, or causing damage to, the bank or any person. B. Without order of a court of competent jurisdiction, disclose to any unauthorized person any information relative to the funds or properties in the custody of the bank belonging to private individuals, corporations, or any other entity, provided that with respect to bank deposits, the provisions of existing law shall prevail. C. Accept gifts, fees, or commissions or any other form of remuneration in connection with the approval of a loan or other credit accommodation from said bank. D. Overvalue or aid in overvaluing any security for the purpose of influencing in any way the actions of the bank or any bank. Or E. Outsource inherent banking functions. 55.2. No borrower of a bank shall fraudulently overvalue property offered as security for a loan or other credit accommodation from the bank. B. Furnish false or make misrepresentation or suppression of material facts for the purpose of obtaining, renewing, or increasing a loan or other credit accommodation, or extending the period thereof. C. Attempt to defraud the said bank in the event of a court action, to recover a loan or other credit accommodation, or D. Offer any director, officer, employee, or agent of a bank any gift, fee, commission, or any other form of compensation, in order to influence such persons into approving a loan or other credit accommodation application. 55.3. No examiner, officer, or employee of the bank central, or of any department, bureau, office, branch, or agency of the government that is assigned to supervise, examine, assist or render technical assistance to any bank, shall commit any of the acts enumerated in this section or aid in the commission of the same. 87a. The making of false reports or misrepresentation or suppression of material facts by personnel of the bank central ng Philippines shall be subject to the administrative and criminal sanctions provided under the new Central Bank Act. 55.4. Consistent with the provisions of Republic Act No. 1405, otherwise known as the Bank's Secrecy Law, no bank shall employ casual or non-regular personnel or lengthy probationary personnel in the conduct of its business involving bank deposits. Section 56. Conducting business in an unsafe or unsound manner, and determining whether a particular act or omission, which is not otherwise prohibited by any law, rule, or regulation affecting banks, quasi-banks, or trust entities, may be deemed as conducting business in an unsafe or unsound manner for purposes of this section. The Monetary Board shall consider any of the following circumstances. 56.1. The act or omission has resulted, or may result in material loss or damage, or abnormal risk or danger to the safety, stability, liquidity, or solvency of the institution. 56.2. The act or omission has resulted, or may result in material loss or damage or abnormal risk to the institution's depositors, creditors, investors, stockholders, or to the bank central, or to the public in general. 56.3. The act or omission has caused any undue injury, or has given any unwarranted benefits, advantage, or preference to the bank or any party in the discharge by the director or officer of his duties and responsibilities through manifest partiality, evident bad faith, or gross inexcusable negligence, or 56.4. The act or omission involves entering into any contract or transaction manifestly and grossly disadvantageous to the bank, quasi-bank, or trust entity, whether or not the director or officer profited, or will profit thereby. Whenever a bank, quasi-bank, or trust entity persists in conducting its business in an unsafe or unsound manner, the Monetary Board may, without prejudice to the administrative sanctions provided in Section 37 of the new Central Bank Act, take action under Section 30 of the same Act and/or immediately exclude the erring bank from clearing the provisions of law to the contrary. Notwithstanding N. Section 57. Prohibition on dividend declaration. No bank or quasi-bank shall declare dividends, if at the time of declaration. 57.1. Its clearing account with the bank central is overdrawn, or 57.2. It is deficient in the required liquidity floor for government deposits for 5 or more consecutive days, or 57.3. It does not comply with the liquidity standards/ratios prescribed by the bank central for purposes of determining funds available for dividend declaration, or 57.4 It has committed a major violation as may be determined by the Banco Central. 84A. Section 58. Independent auditor. The Monetary Board may require a bank, quasi-bank or trust entity to engage the services of an independent auditor to be chosen by the bank, quasi-bank or trust entity concerned from a list of certified public accountants acceptable to the Monetary Board. The term of the engagement shall be as prescribed by the Monetary Board, which may either be on a continuing basis, where the auditor shall act as resident examiner, or on the basis of special engagements, but in any case, the independent auditor shall be responsible to the bank's, quasi-banks or trust entities' board of directors. A copy of the report shall be furnished to the Monetary Board. The Monetary Board may also direct the board of directors of a bank, quasi-bank, trustee entity and/or the individual members thereof, to conduct, either personally or by a committee created by the board, an annual balance sheet audit of the bank, quasi-bank or trust entity, to review the internal audit and control system of the bank, quasi-bank or trust entity, and to submit a report of such audit. 6. Section 59. Authority to regulate electronic transactions. The Banco Central shall have full authority to regulate the use of electronic devices, such as computers, and processes for recording, storing, and transmitting information or data in connection with the operations of a bank, quasi-bank or trust entity, including the delivery of services and products to customers by such entity. N. Section 60. Financial statements. Every bank, quasi-bank or trust entity shall submit to the appropriate supervising and examining department of the Banco Central financial statements in such form and frequency as may be prescribed by the Banco Central. Such statements, which shall be as of a specific date designated by the Banco Central, shall show the actual financial condition of the institution submitting the statement, and of its branches, offices, subsidiaries and affiliates, including the results of its operations, and shall contain such information as may be required in Banco Central regulations. N. Section 61. Publication of financial statements. Every bank, quasi-bank or trust entity shall publish a statement of its financial condition, including those of its subsidiaries and affiliates, in such terms understandable to the layman, and in such frequency as may be prescribed. Banco Central, in English or Filipino, at least once every quarter in a newspaper of general circulation in the city or province where the principal office, in the case of a domestic institution, or the principal branch or office in the case of a foreign bank, is located. But if no newspaper is published in the same province, then in a newspaper published in Metro Manila, or in the nearest city or province. The Banco Central may by regulation prescribe the newspaper where the statements prescribed herein shall be published. The Monetary Board may allow the posting of the financial statements of a bank, quasi-bank or trust entity in public places it may determine, in lieu of the publication required in the preceding paragraph, when warranted by the circumstances. Additionally, banks shall make available to the public in such form and manner as the Banco Central may prescribe the complete set of its audited financial statements as well as such other relevant information, including those on enterprises majority owned or controlled by the bank, that will inform the public of the true financial condition of a bank as of any given time. In periods of national and/or local emergency or of imminent panic which directly threaten monetary and banking stability, the Monetary Board, by vote of at least five of its members, in special cases, and upon application of the bank, quasi-bank or trust entity, may allow such bank, quasi-bank or trust entity, to defer for a stated period of time the publication of the statement of financial condition required herein. N. Section 62. Publication of capital stock. A bank, quasi-bank or trust entity incorporated under the laws of the Philippines shall not publish the amount of its authorized or subscribed capital stock without indicating at the same time, and with equal prominence, the amount of its capital actually paid up. No branch of any foreign bank doing business in the Philippines shall in any way announce the amount of the capital in surplus of its head office, or of the bank in its entirety without indicating at the same time, and with equal prominence the amount of the capital, if any, definitely assigned to such branch. Such fact shall be stated in, and shall form part of the publication. 82. Section 63. Settlement of disputes. The provisions of any law to the contrary notwithstanding, the Banco Central shall be consulted by other government agencies or instrumentalities in actions or proceedings initiated by, or brought before them involving controversies in banks, quasi-banks, or trust entities arising out of, and involving relations between and among their directors, officers or stockholders, as well as disputes between any or all of them and the bank, quasi-bank or trust entity of which they are directors, officers or stockholders. N. Section 64. Unauthorized advertisement or business representation. No person, association, or corporation unless duly authorized to engage in the business of a bank, quasi-bank, trust entity, or savings and loan association as defined in this Act, or other banking laws, shall advertise or hold itself out as being engaged in the business of such bank, quasi-bank, trust entity, or association, or use in connection with its business title, the word or words bank, banking, banker, quasi-bank, quasi-banking, quasi-banker, savings and loan association, trust corporation, trust company or words of similar import or transact in any manner the business of any such bank, corporation, or association. 6. Section 65. Service fees. The Banco Central may charge equitable rates, commissions, or fees, as may be prescribed by the Monetary Board for supervision, examination and other services which it renders under this Act. N. Section 66. Penalty for violation of this Act. Unless otherwise herein provided, the violation of any of the provisions of this Act shall be subject to Sections 34, 35, 36, and 37 of the new Central Bank Act. If the offender is a director or officer of a bank, quasi-bank or trust entity, the Monetary Board may also suspend or remove such director or officer. If the violation is committed by a corporation, such corporation may be dissolved by quo warranto proceedings instituted by the Solicitor General. 87.